Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis, Monday, September 29, 2014, the daily chart of the SPY, and this morning we had a gap down and we made a lower low than this last Thursday, okay, and then we reversed up, and it was a nice reversal today. We went into the 50 and backed off of it a little bit. Let's just take a look at an intraday chart real quick, just get a gist of what happened. Okay, so we gapped down, shot lower, and then just right out of the chute, we just reversed, right? And then, yeah. Oh, I'm sorry. I gave you this was the last week, right here. Gap down lower, and then immediately reversed, and then chopped around most of the day, filled this gap, and we still have this open area here, but let's go back to the daily chart because I want to show you how you can play this if you think there's more downside in the market. And there is. Odds are there is. The probabilities are there is. So if you want to be short the market, but you don't want to get whipped out of the market, what do? So here's what you do. So let's say you want to short the SPY, or you want to buy SDS, or you want to, I wouldn't buy options, but you can sell the ES contract, which is the E-mini. That's an easy way to short if you have a futures account. So here's what you do. You short on bounces, okay? So let's say tomorrow morning you're up 5, 6, 7 points in the SPY or on the S&P, or even at current levels. You put on a short, and you don't have to put on a huge position. You just put on a short, and your stop out, okay, is a close above this level here from last Thursday, the high at 199.05. Okay, and in order to get there, you're going to have volume. The volume that day was about 150 million shares. Okay, it was 150 million shares is exactly what it was. Okay, you're going to have to do something like 150 plus to get up over that level and close there. Plus, you have the 20-period moving average sloping in at that point, right? So, just something to note. If you want to be short the market, you can begin to edge in just using this as your stop-out point. This is what they call your trading against this level. You get a close below this level, or essentially a close below today's low, okay, and then you're probably going to go down to immediately to 195.5, and then maybe 194.5 in this neighborhood, this pivot low here, and so on. So we'll take one level at a time, but that should give you a good directional thing of where we are in the S&P. So what do you have this week? Probably get some whipsaw action maybe tomorrow, maybe Wednesday, but the real stuff goes on Thursday and Friday. And Thursday, you have the ECB making some kind of an announcement. What people are waiting for is they're waiting for a quantitative easing type announcement and what that's going to entail. Now, if we get that, all right, regardless of whether we do or we don't, or they, I should say they, in Europe, if they get some kind of an announcement like that from their central bankers, right? Here's what I want to point out. Let's just take a look at here's the euro. Okay, look where this has been. Let's go to a weekly chart, and it's really dramatic, okay? Look at this fall. Now, this fall, a lot of it has to do with the concept of the European Central Bank. Mario Draghi's going to flood the market with money, just like the Fed did here. They're going to start doing it there. And what happened when the Fed, when it was thought that the Fed was going to do this before quantitative easing started, the dollar took a dip really, really down hard. And then it's actually been rising since the Fed's been printing money. It's a misnomer. Everybody thinks the Fed prints money and the dollar goes down. If you look at a chart of the dollar, here's a chart of the dollar. It's a UUP, but here's a chart of the dollar, okay? Let's go to a monthly chart, and I'll show you what I mean. All right. Where did the dollar hit a low? Okay, it hit a low in the middle of 2011, okay, where the Fed turned on the spigots full blast and I think this is where they came out with their QE2, and then they came out with Operation Twist, and so on and so forth. And you know what? The dollar's been going up ever since that point, okay, to where we are now. All right, so it's a misnomer that when the Fed prints money, the dollar goes up. But so my point is, let's go back to the FXE. Okay, I think the FXE essentially has been selling off. Here's a monthly chart. Look at this: 1, 2, 3 white soldiers down. Okay, and that's probably enough. There may be a little more in it, but not much. And the point is that the anticipation of the ECB flooding the markets with money sends the euro down, and then when they get the announcement, it's sell on the news, and guess what? Thursday, it's buy on the rumor. I think the dollar starts to weaken a little bit, pulls back a little bit. I'm not saying it's going to go down precipitously. I'm just saying it's due for a pullback. The dollar's due for a pullback, and the euro's due for a bounce, and what better time than Thursday in front or right coinciding with the ECB announcement of their money printing program. It just sounds like it's going to play out that way. I don't know if it will, but it just, to me, it makes common sense market analysis. That's where that comes from, that kind of stuff. Okay, let's move on and go to gold. There really wasn't anything happening in gold. GLD finished down 3 cents. Gold was up a little bit overnight, but again, you know, maybe the gold market is waiting for that ECB announcement to make its big move. It just feels like it should make a big move. And guess what? If the dollar sells off and goes down a little bit, maybe gold does pop on Thursday and Friday. That's a possibility, but I wouldn't pin my hopes on it. It's just again, it sounds logical, but I don't have any evidence that that's going to happen. So we'll just leave it at that. However, gold is stretched, and therefore it is due for a bounce, and if it doesn't bounce, and if gold closes below like 12.16, 12.15 a couple days this week, I think it's going down. But if it stays above that level where we are right now, we're at 12.17 as I make this video in the after hours, you know, I think that there's probably a move, hopefully up to 1250, maybe even higher. So we'll see. And I mean in the short term, in the interim. So maybe that coincides with Thursday. We'll see what happens with that. All right, let's look at oil, because there was a bounce in oil today, and it was interesting. Let's go to the daily chart. You had a nice move in oil today, right, almost up into the 50. And if you remember, last week I had a couple lines on. I had a trend line here, okay, and I said that we were, well, it's not coming in. Well, there, that's better. I said it was bouncing up against that line, but it wouldn't close above that line, if you remember. And then I said that another area would be this double top, okay, which we haven't got to yet, all right, but that looks very feasible at this point, maybe even by tomorrow, okay, and this was another level, but we blasted through there today. So I don't think there's much above this level, but if there is, you have a ton of resistance up here. So if you're looking for the forecast that oil's going lower, then you can certainly begin to put on some short positions at this level here, and maybe even slightly higher. Maybe it fills this gap up here. Maybe we go to even number 36, pierce it, and then reverse down. So that's a possibility. So that's where we stand in oil. Play that by ear. I think that's good for tonight. We're going to leave it there. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.